there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. Before we get started this week, just a quick heads up that if you're building in Web3, the next class of the Techstars Web3 Accelerator takes place in spring 2024, and applications are open now. As Web3 is global and borderless, so is Techstars Web3. Although most of the accelerator content is delivered virtually, the class does meet up in person for a week at a time at the beginning, middle, and end of the program in different cities around the world. Jump on over to techstars.com/accelerators/Web3 to apply, as applications are open until 29th November. This week's episode is from a recent virtual session I hosted on Crowdcast for Techstars Web3 with Alex Tapscott, author of the book Web3, Charting the Internet's Next Economic and Cultural Frontier, from publishers HarperCollins. Alex and I were joined by venture investors Justin Swart from BITKRAFT Ventures and Sterling Campbell from Blockchain Capital. With that, I'd like to call out the fact that despite best efforts, we lack diversity on this panel, but I'm committed to do my best to help increase diversity in tech and venture capital. In this chat, I asked Alex to share his thoughts on how we bring users over from Web 2 to Web 3, and a conversation ensued with Alex, Justin, and Sterling on the consumer and the institutional applications of crypto and blockchain, and what to expect next from those building in Web 3. All right here on Money Never Sleeps. Hello, everybody. I'm Pete Townsend, and I am the leader of Techstars Web3 Accelerator program that's investing and accelerating entrepreneurs who are building in Web3. I'm joined today by Alex Tapscott, who is author of a new book on Web3, and also with Justin Swart from BITKRAFT Ventures, and also Sterling Campbell from Blockchain Capital. So welcome, guys. Great to have you on board with us today. Maybe first, just to get started, can you guys just do a quick intro of yourselves, starting with Alex?
Yeah, well, thanks very much for having me. And thank you, everybody, for joining. I'm really delighted to be here. As Pete mentioned, I'm the author of a new book called Web3, Charting the Internet's Next Economic and Cultural Frontier, which came out in September of this year. The book is resonating with a mainstream business audience. It debuted at number 5 on the Wall Street Journal business bestseller list, which is nice to see. The objective of the book is to really explain to a mainstream audience why Web3 matters to them. And it doesn't mean that they have to be a technologist or some adventurer, on the web's next frontier. They could be a student, a journalist, a business leader, or someone who's just interested in the future and maybe wants to understand it better, perhaps play a role in shaping it. I'm also a portfolio manager. I run the Web3 Innovators Fund at 9 Point Partners. It's a TSX listed ETF that invests in crypto assets and related businesses. And I'm someone who's been at it for, over 7 or 8 years in this space. I can't really remember where I got my start, but I've been all in on Web3 since before the term existed or entered the vernacular, at least. And that's been quite a wild ride, and I'm happy to be here.
Awesome. Thank you, Alex. Appreciate that intro. Justin, how about you?
Pete, thanks so much for having me on, and nice to meet everyone and great to be here. My name is Justin Swart. I'm a principal at BITKRAFT Ventures. As Pete said, we're a pure play gaming fund, and we're one of the largest venture funds investing solely into the gaming space globally. We'd like to think we're the best, but there are also other great funds out there. We have about 130 odd portfolio companies spread out across 5 funds with $800 million under management, typically early stage focused. And I think what's relevant to this conversation is we have 2 funds that are focused solely on the intersection of crypto and gaming, which we're really excited about. But before joining BITKRAFT, I spent time at a generalist VC in South Africa called Untitled Partners, which at the time was the only place doing anything remotely interesting and legitimate in crypto in South Africa. And so sort of joined them to help lead those efforts. This is before remote working. And before that, spent some time in investment banking.
Very good. Thank you, Justin. Sterling, how about you?
Sounds good. So I started my career in entertainment. I was originally a touring musician, toured a bunch of hip hop and electronic acts. We moved from there to WME, which then became Endeavor. Focused originally on music touring, which included, or the personal appearance department, which included music touring and gaming, esports, all of that stuff. Moved from there to the investments and acquisitions team. Did Dapper Labs Series A as my first investment. Did the UFC acquisition as well as the On Location acquisition and a couple other entertainment deals before moving into traditional VC, where I spent some of my time doing crypto, but not all of it. I've been in crypto since 2013. I've invested in a few different companies such as Blockdaemon, Bison Trails, and Dapper Labs before starting my own company doing NFTs as a service back in 2019, did over 150 million in secondary sales across the projects that we led, worked with companies like Lamborghini or Music Group and many others to develop projects for them. Before joining BCAP in January of last year, BCAP's the longest tenured venture fund focused on blockchain tech. They've been around for 10 years back in 2013, and we're just now investing out of our 7th fund.
Thank you, Sterling. Thank you, all three of you, for those wonderful intros. And just quickly, before we dig in and get started with the first question that I have for Alex, we are open for applications right now for Techstars Web3 for our class of 2024. Applications are open until November 29th. And we are a mostly virtual program, but we do meet up in 3 cities around the world at different points in time during the beginning, middle, and end of the program for a week at a time, because some things are just done better in person. So just wanted to give everybody a heads up. So if you are interested in the program, anybody that's on this session today, or you have friends who are, please apply to the program and would love to hear from you. So listen, to get started with Alex, it's great to be doing this with you, with Justin and Sterling as well, given that I was one of the ones as well that read your first book back in 2017, 2018. And I know that Justin did as well. And it was something that stuck with me. It was great to see you do that too. And I think part of your ethos, Alex, is to spread the word and to get the word out to mainstream enterprise audiences on different things that they need to think about with emerging trends and emerging technology that is right now in front of all of us. With your new book, with Web3, that I know that you went through tons of conversations, tons of research to be able to curate this all together into some thoughts that are an entertaining novel, right? That will be something that people will want to consume, and that does end up on the bestseller list, like you said. One of the big things that we talk about with Techstars Web3 is that we want to grow Web3. We're not going to be able to grow Web3 just by selling to crypto natives and to existing users. We need to be able to make it useful and applicable for those that are Web2 users only. And during your whole time of prepping to write this book and having those conversations, doing the research, what was one of your big takeaways for how you thought you'd see this unfolding over the next, say, 3 to 5 to 10 years for how we'll see growth in Web3 users? And like I said at the beginning, getting up to that first level of 1 billion users of Web3 from where we are right now, which is roughly less than 15 million daily active users in this space. What do you think about that?
Well, it's a great question. And let me start first by saying, you're right. I did interview over 50 people for the book, and not just, technologists and venture capitalists, though I did interview a lot of those people because they're, well-informed and have great perspective on this. But I also interviewed a lot of creators, a lot of enterprise leaders, government officials, executives, mayors, you name it. And they say, if you're the smartest person in the room, find a new room. Fortunately, that's never been my problem, at least in the conversations I've had with people who are building stuff in Web3. I'm constantly inspired by the kind of work that they're doing. The book was also informed by the work that I've done at the Blockchain Research Institute. So after Don and I wrote Blockchain Revolution, we formed a think tank called the BRI, which counts as its members, past and present, companies like Microsoft, Exxon, Coca-Cola, Fujitsu, Tencent, Manulife, you name it, big Fortune 100 companies. And so I've always been very interested in how Web3, blockchain and related technologies will be foundational to business. And technologies that are foundational to business by their nature are things that have to reach more than 10 million or 15 million people, right? So I am always very fascinated by that concept of how you get to the next billion. I will say, just to kick things off, that, I think now is a very exciting time. I think that, once in a while, a new technology emerges that transforms the economic power grid and the old order of human affairs. And we've seen that play out throughout history with various different epochs. And now we're in this really interesting period where there's not one, but 4 new technologies, all basically emerging at once. As you might imagine by the name of my first book, Blockchain Revolution and the Blockchain Research Institute, blockchains, I think, are the foundational technology of this new era. They enable people and businesses to move and store value peer-to-peer and to automate complex business processes with software. But there are other technologies also emerging. AI, which is reimagining what computers can do, what people can do when empowered by these tools, creating all sorts of big cultural and social questions. The rise of extended reality, which could take our two-dimensional internet and turn it into a spatial web, and the rise of connected devices, not just, smart thermostats, but devices that can think and do transactions thanks to blockchains and tokens. So all of these technologies are not separate. I think a lot of people view them as sort of discrete areas of innovation, when in reality, I think that they're all related. And it's not that AI is underneath Web3, it's that Web3 is going to involve the intersection or the convergence of all these different technologies. And I think, as with other eras of the web, it's going to be foundational to business. So that's sort of my starting point when thinking about this. When it comes to onboarding the next billion people, this is a challenge that I think a lot of people and innovators deal with at various different stages of technology. The reality is that when a new technology emerges, oftentimes it's actually less useful than the thing that came before. And it only really appeals to a fringe part of the market. The biggest customers for most large businesses are not actually asking to use this technology in the very early days. And I look at the different technologies of Web3 and I see this playing out. Think about blockchains. One of the big benefits of tokens is that you can custody your own assets. You can move value peer to peer. You can be your own bank. For a lot of people in the world who maybe don't have access to financial services or live in a country where the local currency is hyperinflationary, where the financial system is underdeveloped, that's a superpower. And for a lot of people in certain use cases, like say gaming, and I'm looking forward to hearing from the other panelists, that's something that can enrich the experience of playing a game. But for a lot of people, it's actually a big nuisance. The idea that you would want to custody and be your own bank is something that I think doesn't appeal to, let's say, a lot of older, wealthier people in places like North America. So that's sort of one example. When it comes to AI is an incredibly effective tool for lots of different things, but I don't think it's yet ready for prime time when it comes to business. We've seen plenty of examples where AI models hallucinate or create fake information, or do something that might be fun when you're writing a poem or a screenplay, but it's not really helpful when you're trying to develop a business plan. Extended reality would be another one where it's useful for some people on the edge of gaming and entertainment, but for the vast majority of people, rather play a console game or free-to-play game on their phone or watch a movie in the theater on their home screen TV. The experience is not quite there yet. So all of these technologies are, when we're looking at the S-curve, right on the cusp of, I think, hitting a mainstream adoption. I think probably AI is the one that's crossed the Rubicon at this point. I think ChatGPT has made it obvious to most people that this is something very fun and useful. These other ones, I think, are all kind of emerging at the same time. So how do we get from where we are today to where we can be? I think that in this industry, there are three kinds of people. There are missionaries, there are mercenaries, and there are pragmatists. So missionaries are the people who are pushing the frontier forward, and they're the ones who are taking enormous risks and are willing to experiment with things that are still unknown to most other people. Mercenaries are the people who see a gold rush. There's a gold rush happening in AI. There was a gold rush in crypto, and there will be again, in my opinion. And so naturally, that's going to attract a certain kind of individual. But the people who are going to help to scale this technology are the pragmatists. They're the ones that are going to take the lessons that we've learned from Web 2, which is how to build user interfaces and the products and experiences that people want to use, and empower it with this feature set of Web 3 that it makes it and enriches it rather than takes away from it. And I think that's going to be one of the big challenges and opportunities for a lot of developers and leaders who are in this industry today. I'll stop there. I have other thoughts, but we'll kick off the conversation from there.
It must have been a ton of work to get to this point, right? Of being able to have this view of the space. It's so great to have you with us today. Justin, just thinking about things from your perspective, Alex mentioned gaming. You came at this from an investment banking perspective, originally being your background. With that, you're now with BITKRAFT and a blockchain gaming focused VC or gaming focused VC in general as well. And does that point to something here in the industry? Is that where you think things are going? Someone who had previously just been wrapped up into investment banking, now going down the path that you've gone down. Is there something to this story here, in reflecting upon what Alex just shared?
Yeah, spot on. So first and foremost, I've been a gamer all my life. I think a lot of I think Elon Musk and a few others have all sort of got their start in technology via gaming. They often built their own computers, which, although I won't compare myself to him, that is at least where I got my start in just trying to build my own computers and sort of learn how to sell random sweets to friends at school so I could buy the latest GeForce cards. And so my interest in gaming naturally led me to BITKRAFT, which is an amazing place to work. You speak about the people having the smartest people in the room. I constantly feel that way working with the team. So that's first and foremost what led me to BITKRAFT. But more than that, the interest in cryptocurrencies and in the blockchain space and what led me to read Alex's book is I'm also based in South Africa, where we have quite authoritarian leanings, issues with transparency, issues with hyperinflationary currencies and economies. And so there's just a natural fit for why I was involved in the space. So it was that undercurrent that pushed me to work at a VC firm that was the only firm working in the cryptocurrency space in South Africa. Of course, the OGs like Blockchain Capital and Polychain were around at that time as well. The interest in gaming, and just to go back to your question, is our hope, and I guess our bias and what we sort of fundamentally bet the firm on and put all our chips in, is that gaming will be the tool set and the mechanism that helps users cross the chasm into this new Web3 world. I think that Alex has written about so effectively. And the reason for that is, firstly, if you just start at the top, there's 3.6 billion gamers out there. And, you may think of gamers as people who sit on sort of very high end, maybe way too expensive PCs like me. But in truth, the 40-year-old mother waiting for her kids while at school and playing Candy Crush is also a gamer, particularly given the amount that they spend on in-game purchases and in-game items. If you narrow it down, there's already 2 billion PC gamers out there in the world, if you want to sort of talk about more traditional and hardcore gamers. And what's ingrained in those kind of behaviors is stuff that is very aligned with what's happening in the cryptocurrency space and what you're seeing. There's living in virtual economies and being used to thriving, working with complex at times, but also simple virtual economies, buying stuff in virtual economies to kind of live in this space. There's interactions with other people in sort of these rich worlds that you kind of see in the meta and in the sort of outside of the crypto space in places like Twitter and Reddit. There's buying items that you sort of own, or there's views around ownership when you're building a character in a MMO game, for example. And it goes back to the example that Vitalik gave, I think, of why he invented Ethereum, is because Blizzard nerfed his sort of absolutely nuked his World of Warcraft account. And he just got so infuriated that he decided to build a world computer where you can sort of remove these impacts and build something a bit more trustless and a bit more permissionless. So gaming, I think there were early signs that may be familiar for people on this call. And for all its flaws and foibles, Axie Infinity brought, I think, about 3 million people into the Web3 space. Now, of course, that was primarily speculation-driven, primarily a promise of people in sort of third world or lower end of developing economies to earn something in these new virtual economies. But it was at least promising signs that there's something out there. The issue is that really good games take about 2 to 3 years to build. And we're only seeing the fruits of that starting to show some green shoots in terms of people who have never really interacted with the cryptocurrency space, buying NFTs for the NFL Rivals game and application. These are sports fans who now want to own kind of digital trading cards of their sports hero within any sort of game or sport that they choose. And you're seeing these on-ramps in places that are driving retention, that are driving engagement in these virtual economies with what we really call core loops. Really strong sort of engagement drivers that you see in games where you will level up a character, you will go out and mine some rocks, and you'll use those rocks to build a house, and that house will be used to generate in-game currencies, for example, and that loop will continue until you build up your sort of big megalopolis in something like Minecraft. These behaviors are already ingrained in how people kind of work with in-game economies and virtual economies.
Yeah, definitely. Feels like gaming is such a strong vein to follow for what's happening in Web3. And obviously there's the whole Metaverse conversation, which became a bit overbaked in 2021. Yep. but it is a trajectory that the human race is on, is that we're going to be spending more time in virtual worlds. And
Yep.
what are games other than virtual worlds? Just how immersive is that? And we're on a long trajectory here. So
Yep.
just think back to 1994 or 1995 when, we're first messing around with Netscape nearly 28, 30 years ago. And look
Yep.
how far we've come since then.
Yeah.
And
You're seeing this with younger kids, sort of the Gen, even before Gen Zs, and I think Gen X, Gen Alpha. Yeah, Alpha, yeah. Where they're spending much more time online in these proverbial digital third places, right? You have your home environment as your first place, your work and social environment as your second place. And then the third place is everything around that, where you interact. And traditionally that used to be arcades back in the day, parks, maybe hanging out with your friends, maybe at their houses, whatever it was. But now it's places like Fortnite, places like Roblox, and it's in games that are traditionally hardcore, what we sort of term as a genre, quite hardcore. It's not Candy Crushers, it's not sort of Farmvilles and that. It's Fortnite, it's Roblox, it's these very complex virtual economies and these very sort of highly engaged worlds where you just go to hang out with your friends. On a more sort of something we talk about at work, that a more social from anthropology point of view is, so at BITKRAFT, we have a view that we invest in synthetic reality. We think people are going to spend more time online, which I think we all agree with on this call. But what you're seeing, little interesting behaviors of people these days, is doing weird stuff in the physical world to, whatever it may be, putting pranks on people and doing stuff that's quite like socially questionable, so that it can be filmed and put on to TikTok or Instagram or something like that. Why? Because that virtual economy that they're posting to is where they earn the majority of their income. So people are forgoing these like weird physical, agreements and social contracts that we have with people to act in a normal way and doing kind of weird, funny stuff, posting it online, because that's where their primary source of income is. And that we think is an interesting kind of inflection point to monitor.
Definitely. And Alex, any reflections on that before I swing it over to Sterling?
Yeah, just a couple of thoughts. So we have a whole chapter in the book on the metaverse, right? And we basically say to give the metaverse a second life, you need Web3, because I think a lot of visions for what the metaverse look like are being advanced by Web2 companies. And I think it goes something like this. You don some kind of virtual reality headset and enter some virtual world where, you go to socialize, to have experiences, to consume content, or to play games. But in those environments, you are beholden to the rules of the company that's created it. You have no privacy. You have no control over your own identity or your data, and you have no digital property rights. If you want to sell those assets or take them with you, you cannot do that, right? And to me, that's not a vision of a metaverse. And whatever definition you have, I think of it as basically like a new shared reality online that in many ways is as rich as the experience we have offline. That's not, to me, the vision. That's just virtual Disneyland. And that's fine. Like Disneyland's fun and everything, but it's not, it's not enough to get us excited, right? So I think in order to fulfill the vision for what I think a lot of people have for this world, and to avoid a lot of the pitfalls, we need to basically get three things right. We need to have a right to privacy, reasonable right to privacy, which is already enshrined in law in places like Canada and the US. You need to have digital property rights, and you need to have economic freedom, the ability to, do with your assets what you would like to do. And those are things we already have in the real world. So with blockchains, we have a way to create those conditions and fulfill that vision. So that's sort of number one. And then number two is like less highfalutin and more just granular. People already spend tens of billions of dollars on virtual assets that they buy, but they do not own. So I think that the argument is very simple. It's like, if you're going to spend billions of dollars on something, if you might as well own it, right? If you're going to buy it, you might as well own it. And I think that ownership becomes part of the gameplay or part of the user experience that enriches it in some manner. And I interviewed one of the many people I interviewed for the book is Yat Su, who's the founder of Animoca Brands. And is, in my opinion, is the most articulate person on this subject. I think he has a way of explaining it that's frankly unrivaled. And he actually described how gaming itself has gone through various iterations. People thought gaming was capped at 800 million people because that's the only amount of people that would ever buy a $500 console and learn how to do that. Like that was a steep learning curve. But then the free to play era and the smartphone era helped to expand that to the 3.5 billion people who play Candy Crush and these other kinds of games. And what's happened as a result of that is that the console gaming market has actually grown much more because the total number of gamers has increased, although total addressable market for all gaming is just way bigger than it was before. So I think that the ownership as a feature set of gameplay can help to actually not just convert existing gamers from one mode to another, but rather to actually expand the number of gamers to a whole other set of people who view that as something that's very fun and interesting to do, basically.
Yeah. Good point. And there's so many strands I could pull on there, Alex, that could lead us down a big rabbit hole. And I wanted to get Sterling's insight here as well. And Sterling, given that blockchain capital has invested quite diversely across Web3 and has been doing so since 2013, one of my favorites is Arweave, who are also a Techstars grad. And Sam Williams, the founder of Arweave, describes Web3 as being the protocolization of web services. So things that used to be offered as services on the internet by companies is now supported by protocols. When you look at Web3 across the different investments that blockchain capital would, I'm just going to rattle off a few that are well known: Aave, Coinbase, Kraken, OpenSea, along with Arweave. That's across the board, right? You've hit a bunch of different segments of Web3 with that. The saying in crypto is that if the longer that you've been in this space, the more cycles you've seen, and the more cycles you see, the more you're able to look at, okay, here it comes again. Here's what's happening again. Okay, we're going up and then we're going down. We're going up and we're going down. Given that kind of stature of blockchain capital in the industry, given the tenure of investing in this space, do you think that there's a vantage point that blockchain capital and that you have that kind of gives you some insight as to what you think is going to happen next?
Yeah, I think it's a really interesting point. I think the really cool thing about protocols, to go back to that point, is that when you do them correctly and you align ownership and you align usage and the users with the protocol itself, it's really hard to unseat those winners, right? So like Aave is a good example. There's a bunch of different examples in which like you align value with protocol with users. The reason that crypto sometimes falls short is when it looks to be extractive, when it looks to ladder up usage to where the latecomers are the ones who are paying the early comers and things like that. So I think when we look at things, it's always under that lens of like how much longevity something has, right? A protocol that aligns usage, ownership, et cetera, is one that is venture investable, while the more flash in the pan quick hitters are ones that we've seen time and time again. A great example of that is in social tokens, where we've seen all different types of applications that have tried to leverage creator tokens and things like that, where again, like you're turning an artist creation into a 24/7 market that fluctuates when they go to sleep or when they get offline or when they're not, they feel sick and they're not making content and things like that. We've seen that now in every single cycle that blockchain capital has been a part of. We've seen a lot of different types of iterations on lending protocols, for example, and things like that. You see it where a different protocol will have like a one step up improvement on what Uni provides, and then Uni, given kind of where it sits, can just add those things into its open protocol as well, right? And because the value prop is still the value prop of that protocol, people gravitate towards those things, right? So I think we're going to continue to see like the protocolization of all different types of things. To your point, I think there's a lot of opportunity in that. And when you look at like different things, like for example, like a casino game, all have the same rules. Leagues in general are essentially protocols. There's so many different ways in which you can pull ownership out of like this top tier or centralized entity and more into the users and the people who are spending their time and energy within it, which I think is the ultimate unlock of all of this. And again, those things are really hard to unseat. It's really hard for centralized players to compete with those at scale. And I think that's the future that we're moving to and the one that we invest in. And again, it's something that we used a lot in our materials, is that just by having virtue of surviving 10 years, it's an achievement in and of itself, because there's a lot of pitfalls, a lot of things to fall victim to. And I think that continues to be one of our biggest strengths and advantages.
Yeah, definitely. It's just seeing the cycles, being in this space, getting your reps. I've seen the benefit now of seeing over 1,500 different deals come in over the last couple of years with Techstars Web3. So yeah, I know what I'm looking for, right? Alex, any thoughts and reflections based upon what Sterling just shared with us?
Yeah, I mean, blockchain capital is Lindy, the way Bitcoin is Lindy. Just like the longer it lasts, the more likely it is to continue to last. And there's a point to be made there, of course, about like which platforms are likely to continue to be relevant in the future. And I think that just what we're seeing with Ethereum, for example, there's been lots of different narratives about how Ethereum will be replaced or will be disrupted by alternative platforms or by layer twos or other potential scaling solutions. But from my experience, talking to a lot of business leaders on the enterprise level, is that Ethereum is the place where they always start. If you're a big enterprise and you're looking to do something in Web3, and I'm not talking about like boiling the ocean with some proof of concept kind of thing, but rather, reaching into the Web3 toolkit, finding something useful and using it as a way to reach a new customer or target a new, opportunity or build a new product. It's always on Ethereum first. Now, they may eventually do other stuff down the road, but I think it's interesting how that's the case. A few reasons. One is it's Lindy. I mean, it's been around for a while. It's got a market value of $250 billion. But also, I think that the move from proof of work to proof of stake has helped to make Web3 in general much more palatable to large publicly traded companies who have stakeholders that they have to answer to. And some of those stakeholders would question why they're using a platform like, say, Bitcoin or Ethereum when it was proof of work and when it uses, large amounts of electricity. Now, there's a good answer to the whole energy use question, but just from a pure hurdle to overcome, that's no longer in the way, right? And I think that that's been really, really helpful as well.
You're also seeing, just speaking about Lindy effects, there's that Electric Capital Developers Report that looked back at the history of where developers were sitting on different protocols. It was completely fragmented way in the beginning. And slowly but surely, it's starting to coalesce, it's starting to consolidate within like 3 to 4 kind of protocols, roughly non-EVM and EVM chains. And if you look back at history, it mirrors what happened with the split between mobile OSs with Android and iOS. Also, I think way back when, it started quite fragmented, but eventually just coalesced into 2 kind of oligopolistic structures. And I think that developer mindshare is also quite important.
Definitely. And, we're looking at this space and seeing this is a multi-chain past, present, and future. And I find it difficult to look at any one single chain and see how that may win out. Although obviously there's tons of opinions around that around the world, but do you guys, maybe Sterling, just starting with you, have you any observations on where you think some of the more innovative applications of blockchain will be built on which protocols? Anything come to mind?
I think it's a great point. I think it kind of depends on what you're looking for. Like, I think the future of rollups kind of enable a lot of different customization around things. Like, I think we're seeing now like roll out a bunch of different ZK EVMs, for example. And I think that rollup specific apps is a future that we see working quite well, especially because you want to control a lot of different, the app wants to control a lot of different things, and users also have a bunch of different preferences as well. So for us, like, there is no one single solution that makes the most sense depending on what you want to do. And we've seen the effects of congestion, and there's a bunch of different arguments to be made around how to handle congestion and state load and all these other things. So I think that we're going to continue to experiment around those things. And I think the nice part about all of this is that as soon as something works, we see it tried 1,000 different ways. We're especially in the VC side, like, there's so many different comparisons that you can be made of, like, this is the X on Polygon, or this is the X on Solana, whatever you want to call it. And I think there's a lot, that's the beauty of all of this and a lot of the open source nature of what we're doing. And I think ultimately usage and what works trumps all. I think something that we've seen really interestingly with stablecoins, for example, is that people that actually use them and that find value in them, they don't care and they have no alliance or allegiance to what protocol they're using. If Tron is the cheapest, they'll use Tron. If Solana is the cheapest, they'll use Solana. Whatever makes this as easy as possible to get to the end result that they're looking for, they have little allegiance, and I think that that's the most important part, because we get so caught up in dogma and I think touting bags, that I think it's actually important to understand, like, at the end of the day, the use cases trump everything, and whatever creates the best possible experience for the end user will win out. So we keep our minds quite open and try not to have too much of an echo chamber, and sometimes just try to get off Twitter a little bit to avoid that.
Totally. Alex, anything that you found through writing the book in terms of different blockchain protocols that you thought from a particular use case were going to be especially useful?
Well, I'm with Sterling that like I'm not dogmatic about different protocols, but just to reiterate what I said earlier, it's like when it comes to what big businesses are doing, part of the consideration is the performance of the blockchain, and part of it is just like what's the social consensus around the chain. Like, is it going to get me fired if I do something on Ethereum or not? If I work at like LVMH or Pepsi or Starbucks or something like that. Anyway, so that's just sort of that point. The area that most surprised me in the research, and the area that I probably left feeling the most excited about, is actually decentralized physical infrastructure, or DePIN. Now, there have been projects in that space that have been around for a while, like Filecoin and Helium and some of these others. And it's always struck me as like a really great idea. The idea being basically that all of these assets in the world, those assets can be, latent computing power, they could be, Wi-Fi hotspots, or they could be dash cams or whatever. And all of these assets can be, pooled together into a network where you use a token as a coordination and incentive mechanism, right? And if we did that, you could create resources that normally would require huge companies with vast amounts of capital. If you wanted to recreate all the mapping data in the world, you'd be competing directly against Google. It would take tens of billions of dollars, and you'd be far from successful, or success would be far from guaranteed. But we've got projects like Hivemapper, for example, that are doing exactly that. When it comes to decentralized computing, in order to fulfill the vision of a metaverse, or to power all of these AI models, or for that matter, to run all these different blockchain networks, we need a lot of computing power. And there are projects like the Cash Network and others that are basically like figuring out how to incentivize people to pool high performing GPUs into decentralized clouds to actually like provide excess capability to those kinds of use cases. And I'm just fascinated by that because, the physical infrastructure, it's yet another reminder of just how big the opportunity set is for Web3, even compared to other eras of the web. Fundamentally, the first era of the web, first and second era of the web, Web 1 and Web 2, which we haven't actually defined, but I will just describe broadly as the Internet of Information, basically disrupted information industries like media and publishing and so forth. Whereas what blockchains and Web3 promises to disrupt much bigger industries, financial services being the obvious one. Blockchains are a way to move and store value peer-to-peer, and also to build peer-to-peer models for lending and trading and insurance and so forth. So that it impacts finance, but also to build decentralized models for physical infrastructure. That's a multi-trillion-dollar opportunity. So to me, those are some of the things that I think are really fascinating. Now, to Sterling's point, some of those projects are best suited to certain blockchains. So the Render network, for example, is built on Solana. Render is a decentralized network that allows you to render high quality visual effects in real time by basically fragmenting a job across a decentralized computing network and having all these different devices work on the same problem all at once. That kind of thing works better on Solana than it does on something else. There are other projects, though, that are built on other networks as well. So I think that the platform or the protocol question is something that can definitely be application specific. But in terms of the area that I'm most interested in, it's in this, or one of the areas that I'm most interested in based on the research, it's in decentralized physical infrastructure. I'll just add like that one example I kind of mentioned, Hivemapper. This is a project that basically allows you to drive around, mapping the world around you, and passively earn income because the data that you're creating is going into this data commons, this like, user-owned network of mapping information. And what's really interesting to me about that project is not only that they've mapped 10% of the world's surface, or 5 million kilometers of roadways in less than a year, but that in certain cities, like in say New York or LA or Seoul, which are the three most popular markets for the product, they're actually getting better and more up-to-date data than Google ever could. Because it doesn't matter how many Google cars are on the road, there are always going to be more non-Google cars than Google cars. And if you can get just enough of them to be doing this kind of work, you can actually create resources and assets that are superior to what you see in Web 2. Not just better in certain ways, but superior overall. And to me, I find very fascinating.
Definitely. We do have a long way to go, but one of the big things that's standing out for me is that you can be building infrastructure that doesn't require you to understand Solidity or Rust at all. and that you can be building in this space. And that leads us to our first question from Federico Panizzi. So I wanted to jump into this and shout out to Federico. He was part of our Techstars Web3 class of 2023 with his business Loki code. So hello, Federico. Great to have you with us. He said, in my opinion, for Web3 to become an even more mass adoption phenomenon, accessibility is very important. What are your thoughts regarding the current state of Web3 accessibility for people with weak and or fewer programming capabilities, i.e. how do we get people up the curve from a business perspective, from an enterprise perspective? They're trying to build solutions in Web3 that may not have the full depth of capability from a pure frontline programming perspective in order to do that. Anyone want to jump in with a response on that?
I think it's definitely a problem. A lot of people are trying to solve this. I think Aptos and Sui with improved language is moving towards it. I think a lot of people didn't want to touch Cairo before. A lot of those things are being solved. IMX has dealt with that level of FUD before as well. I think there's a couple different things. You could always participate in these applications, just even as a user. I think the biggest thing that I always tell people to do is just try everything and then realize what you like or what's missing, and then work tirelessly to build it. Open source communities are extremely helpful in building all these things, a lot more than trying to learn other things. I'm a hacker myself and have been able to build applications off the backs of many others. So I think that just trying things, being participatory in systems in which you otherwise can't, use your idle compute, jump into one of these GPUs as a service type networks and get involved. And I think there are more resources than ever and a lot more tooling companies than ever that are well capitalized and designed specifically to focus on this issue. And I think it's something that I think will be much, much easier today than it was, next year than it even was today, right? So I think that there's a lot of different ways to be participatory in these systems, even if you aren't a Solidity dev. Also, just go learn Solidity. It's fun.
Yeah, absolutely. No, I'm not there yet, but maybe one of these days. But
we actually have a great technical analyst at BITKRAFT who he says something like front-end code is actually harder than Solidity. I think he's more of a back-end engineer, so he sort of knows these things. But he says it's once you sort of jump in, it's not too bad.
One more point real quick is that when I started doing the NFT thing, I was writing contracts myself and doing a lot of things from scratch, made a lot of different mistakes. There were plenty of things that could be exploited. Now there's 7 different places to go, like Metaplex on Solana, incredible, fast routed everything that took me a lot of time to do. And that will continue to occur across all different types of applications and activities. So I think that's a great example of I used to sweat over my computer for hours on something that now I could launch costlessly and instantly. And it took me thousands of dollars and a lot of time and energy and fear before. So I think that's a microcosm of the effect.
I got one additional point on Sterling's. I don't have an answer in terms of actual developers jumping into the space, but just to answer the question about how do you onboard, more of the mass audience into making it easier, we've invested in the tooling for that. We've invested in companies that make it easier and more familiar for traditional, if we could call it that, developers to interact with what they know and transform that into a crypto native infrastructure. So for example, we invested in a great company called Ready Games. It's ready.gg is the website, and they plug into the back end of games. And the sort of front end is very familiar for traditional developers. And what it does is it hoovers up all this data and transforms things that are important to that game economy into things like NFTs, if you swords, armor, items, land, what have you, and automatically sort of does that on whatever chain you need, and converts a game from a Web 2 game into a Web 2.5, if we can call it that game.
I was going to add one other thought, which is that from a pure user perspective, there are 2 ways to look at this issue. Number one is to say that never underestimate people to adopt new tools and technologies. That's been the history of humanity for thousands of years. There's a story that's probably not true, but it's still a great anecdote, that the inventor of the automobile, Mr. Daimler, said, there will never be, this is a great invention, but there'll never be more than 50,000 sold, because that's the number of trained chauffeurs in the world, right? Because the old paradigm way of thinking was the only people who would ever drive a car are the people that are used to, basically being a chauffeur of a horse and buggy or something like that. And what they failed to realize was that it was going to become a consumer product that everybody was going to own eventually. And the same was true for computers. People said computers were never going to be used by managers or professionals like lawyers and doctors and bankers because they wouldn't learn how to type, right? Typing was something that secretaries did. So the computer revolution wasn't going to happen because bankers weren't typists, right? And of course, that's not true. People got over that. Everyone uses computers and knows how to type. And so when I think about Web3, I think there is a concern in a way that, well, people are not going to feel comfortable custodying their own digital goods because that's something that requires this learning curve, right? And so as a result, there's going to be sort of a cap on the number of people who will ever sort of fully embrace Web3. And maybe the solution there is Web 2.5 or having a custodian or something that you work with. But also, don't underestimate people. That might be true for some people, but for others, we may see that group segment of the market will grow, number one. And then the second way of looking at it is that in the early days of a technology, it's usually not that useful, which is what I said at the outset, not only as a tool for business, but even for individuals. I think all the panelists are old enough to remember the time just before the internet when, we got our first home computer and had to log on to the web, for the first time, and how that was a lot of work, and how our parents probably were, amazed at kids that could even figure it out. And people said, the web was never going to scale for that reason. But we got over dial-up and we got over desktops, and we developed all this tooling and this software interface to make the web a seamless consumer product to the point where it's basically disappeared. You ask a lot of people, like, how often do you use the internet? They might say once a week, but then they say, how often do you use TikTok or Facebook? They might say every day, right? Because they don't even realize that the consumer application itself is the web.
And it makes me think of the fact that, we still have VCRs on this planet. We still have DVD players on this planet. The older technology still will be used, the new technology and the things that we see today. So for example, streaming, and folks are watching this perhaps on a streaming device. That may not be the end result of where we end up with how people engage with virtual content, online content. We have time for one last question. It's a question on the regulatory landscape from Rob Friel. Said there's still widespread uncertainty how regulators will ultimately intercede in the crypto ecosystem. How are we thinking about that eventuality, and what form do you think it might take? How does that impact your approach to managing risk around crypto investing? From Alex, from Sterling, or Justin, any view on this from a regulatory perspective that you'd wanted to share?
Yeah, I can give a quick one. So I think firstly, maybe just a small point is that might be quite a US centric view. I don't want to sort of step on anyone's kind of toes here, but that's not necessarily the case all around the world. Right? The MiCA framework is quite positive coming out of the EU. That's sort of setting the right kind of clarity and legislative clarity around what these digital assets could look like. My own country, South Africa, for all the sort of swirls and flaws, is also setting some pretty decent legislation in terms of how to regulate these things. And then the entirety of Asia, it goes kind of up and down, but some parts of it have interesting regulatory stuff coming out of those countries. So on the US side of things, I think the pendulum might swing the other way, because I feel like, you guys have an election cycle coming up. I don't think it's going to fly that you can have an unelected regulatory body acting as a legislator to set frameworks for these sort of things. And I think I don't know which way the election cycle will swing, but I think there's a more centrist view, at least as it comes towards kind of governance. And I've got a sense that the whole FTX debacle was shone a pretty bad light on the SEC. And I think that there might be some kind of green shoots coming out of that. As terrible as it was, that might be at least one of the green shoots. But that's mine.
It's difficult to look at the US for any example of anything from a regulatory perspective right now. I fully agree with that. Alex, I know we're just about at time here, but any closing thoughts to round out this conversation for us?
No, I agree with Justin, which is that the US is to lose. Silicon Valley specifically was once called a tech Galapagos because of the very unique set of conditions that existed there and nowhere else, right? The access to capital, talent, government R&D, the university system, big companies, and so forth. And that set of conditions did lead to the first sort of crop of internet giants. But this time is different. Those conditions don't just exist in one place. They increasingly exist in other parts of the world. Silicon Valley will remain a center of innovation, obviously. But this time, it's the US's to lose, right? In the 90s, most of the internet connections and all the investment in the internet was in the States. And that's no longer the case. And even governments specifically are trying to make themselves more attractive to investors and to founders, whether in Dubai or Singapore or elsewhere. So I do think that it is a US-centric view, and it's a reminder that we live in a much more connected and globalized world than we did, than we ever have at any point in time, but especially in contrast to the early days of the web.
Yeah, I personally, I think that, in 5-10 years time, we'll all look back at what's going on in the US right now with the stance on regulation towards crypto, and we'll all laugh nervously and change the subject, right? We're at time, and I would love to thank our contributors today. Alex Tapscott, thank you so much for joining us. Really appreciate having you here with us. Justin Swart from BITKRAFT and Sterling Campbell from Blockchain Capital. Thank you so much. This was an awesome conversation. So thank you, everybody, and thank you for the questions. Those books will be out there and on their way to you very shortly. So thank you. That does it for this week, folks. Thanks to Alex Tapscott, Justin Swart, and Sterling Campbell for joining the conversation. Links for all of our guests and how to get in touch with them are in the show notes on our website, moneyneversleeps.ie, including how to get your hands on Alex Tapscott's new book, Web3, Charting the Internet's Next Economic and Cultural Frontier. Also, subscribe to our newsletter on our website for more insights on each episode and details on more media and events that bring everything to life. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify, as it helps others to find the show. Thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. Applications for our 2024 class are open now, so hop on over to techstars.com/accelerators/Web3 to apply until 29th November. Also, there are plenty of links in the show notes on moneyneversleeps.ie on how to get in touch, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!